Hi, and welcome to this week's Mortgage Broker Broadcast. My guest this week is Matt McCullough from Aldermore Bank, National Sales Manager of Aldermore Bank. And Matt's been on the podcast before, episode 46 in January 22, last year, episode 53 as well. He came back on very quickly. We had a part one and part two. And I just want to get Matt back onto the podcast. I've had a few conversations with Matt about the market, about the role of a broker, self-employed broker. And I just thought it'd be good to get him back onto the podcast, get that recorded, just have a bit more of a conversation out of the discussions we've been having. So yeah, let's just get Matt back onto the podcast. You're listening to the Mortgage Broker Broadcast with me, Craig Skelton, the podcast which helps mortgage brokers at all stages of their mortgage broking career. So welcome back onto the podcast, Matt. How are you?
Good. Busy. Yeah, yourself?
Good. Yeah, very good. Thank you. Very good. Thank you. We had a bit of a chat before in terms of before the podcast, talking about the busy situation, and you can be very good, productive busy, or a very firefighting busy, or you can be actually, oh my God, what is happening busy kind of thing. So yeah, so good things are happening. Things are good for you at the minute.
Yeah. It's a good place to be at the minute. What we're doing, and people say the mortgage market's, very turbulent. It is. So I always try and express to people when it goes a bit quiet, right? So maybe maybe you're a lender that's got, not the best pricing out there. Maybe you're a broker that's not got, the audience of clientele they normally specialize in isn't quite productive at the moment, right? So you hear the words quiet. From our point of view, when you're working in like sales in an industry like this, you're always busy, because if it's quiet, you're trying to make it not quiet, and if it's busy, well, you're busy. So there's a finger on the pulse to everything here. Whether it's just trying to identify new ways to help customers, brokers, whether it's trying to find new ways to get our activity levels up, whatever it may be, we're always on the go.
Definitely. Do you want to? We've obviously gone straight in and straight off on a tangent, which is ideal because that's how I like it. So,
Yeah.
but do you want to just give a brief? You've been on the podcast before. We did two. So you came on in January 22 and then March 22. So over a year ago now since you've been on the podcast. So great to get you back on, and thanks for agreeing to come back onto the podcast. Do you want to just introduce yourself and explain who you are before we start?
Yeah. So, wow, over a year as well. It feels like a lot longer, to be fair. I don't know why it feels
Absolutely, I
longer.
know.
Crazy, right? But so I'm Matt McCullough. I run the field sales team at Aldermore Bank. So day to day, I am liaising with brokers all over the UK, and I'm helping people place business where they struggle to today. But also, I like to make sure that me and my team like to work a little bit differently. I like to make sure that we promise to provide a format of education to every broker we meet, a new tip, something to help them, either due to the business that we work for or the industry that we work in.
And to be fair, mate, I'd like straight in there. I think if you haven't listened to the first two episodes, so I'm looking down here to my left, you see, because my memory is not great. But so episode 46 was when you was on the first time in January 22, when you were talking about the focus on the people and the intermediary market a little bit, but then focusing about it was all about the people and not putting people in boxes and things like that. And then the second time, which was quite quickly after, which was March 22, episode 53, which was then about the three pillars, and it got into a lot more detail about that. So, but you're absolutely right. That's only a year ago, where it does seem like a lot longer than that. So, what's been going on in the last year? What's happening right now?
Well, so right now, we've had a couple of clearly seismic changes in the mortgage market. Not linked to some probably irrational thinking around the budgeting side of things, which obviously has led to clearly interest rate changes left, right, and centre. So only a small thing to deal with. Joke. But what I will say is, what that's actually doing is, it's probably bringing people like me to reality a little bit. So, being in the mortgage market for 14 years or so now, maybe a bit less, but also being a homeowner for 10 of those, I've only ever known a really flat interest rate. So to me, yeah, this is all alien, but I'm fluid with it because I work in an industry surrounded by people like you that are vastly more experienced in mortgages, right? And they've seen the peaks and troughs of interest rates over the years. So I'm learning a lot as well, believe it or not, in the, day to day. And what we're trying to do is, so essentially what it's making the mortgage market, it's challenging, right? It's very challenging. It's challenging for new customers, but it's also pushing people. It's pushing the boundaries of people's thoughts and their policies and their behaviours around how can we then strive to do more within the risk boundaries that you've got to help in the current climate. So it's not the word exciting. I won't use it. It's testing. Exciting feels like it's a positive word, right? And we're doing a lot of positive stuff in the industry at the moment, but unfortunately, there's a lot of people that are being locked out of lending because of the interest rate challenges, affordability, cost of living. There's a whole host of problems going on. So I wouldn't say it's overly positive, but what I would say is that it's testing us to try and learn more and develop more each day.
No, I think, and that's it. It's absolutely, testing's a good word. I use the word of adapting. So brokers that haven't been in the industry for quite a long period of time and are just used to, well, is it a 2-year fix or a 5-year fix? And that's basically the choice. Even though they say their advice and recommendation, it literally was 2 or 5. And you might sometimes get a 3 and a 10 mixed in with that as well. But it's just about being, for me, it's about being adaptable in the industry right now. I think that's the sort of the thing with being a mortgage broker, that you're absolutely right. It is a challenge and it is very different to what it was 12 months ago, even 6 months ago, kind of thing. But I think the brokers that are winning and the rising to the top are adapting in terms of their skill set, their knowledge, and like you say, it is a testing time.
Yeah, definitely. And early observations over the past sort of 18 months really from me is, and there's a lot of new brokers, which is brilliant to see. Even in a turbulent market post COVID and enjoying the interest rate issues we're seeing now, right? Is people still thrive to be within it. So that's brilliant to see. And what we are seeing though, and what I'm personally seeing, is a lot of new people taking to self-employment, which is brilliant. It's a risk for people that. It's a risk, but it's an exciting step to take for some who've got the right backing and the right time to do it. But I do see some issues with it,
Okay.
because at a time like this, right, there is an abundance of people. Because in the UK, right, a little story here, but like the European mortgage market and so right. It's not. No one wants to own a home. They all rent. So many people in Europe just rent properties. In the UK, we're obsessed with owning a house. And by owning, what I mean is getting lifelong debt to repay it. So one day own it outright. Yeah? But the reality is, we're obsessed with it, which is great for us, right? As in the industry. But that becomes very emotional when the people that want to buy their first or family home get locked out of that because of affordability reasons, maybe criteria, lack of product choice, stuff like that. So what I'm seeing at the minute, right, is brand new brokers to market not focusing on their audience. They're doing some really fantastic things online, from social media creation, good landing pages, putting great content out there. But actually, they're attracting every type of mortgage borrower possible. I've even seen some people saying they're getting too many leads. Now, that's a good problem to have for a business, but a bad problem to have for a business owner who potentially may not be getting back to prospective clients in the appropriate time they need. So if I'm an outsider looking in, which on this occasion I'm going to be, I think brokers, some of the newer brokers, actually take a step back, speak to experts like yourself from the coaching side of things, Ash from the content point of things, and understand, how can I tailor what I'm trying to get out to the audience I want to attract, to the customer that I want to attract? Does that make sense?
Absolutely does, and it totally does, Matt. Because I hear what you're saying. Because I think that's the thing with it. When you're new into, I've sort of a lot of brokers, particularly over, like say, the last 18 months, we've seen a lot of people coming into the industry and going self-employed, because really that was fundamentally the not the easiest option, because it's not easy to go self-employed, and I've talked about that before. It was the only option really that was out there. So in terms of, they were looking to move from employed or from one employment to becoming employed as a mortgage broker, so totally new into the industry. But then also as well, brokers who were, or banking advisors who were advisors, but then moving into the self-employed realm. And there has been a massive influx of brokers getting into that self-employed space, new into industry or experiencing the industry. But like you say, I think I've seen a lot of people leaving the industry now because they just can't make it work, and it wasn't what they thought it was going to be, and they've tried what they thought things were going to be like, and just not prepared to be the mortgage brokers. We've already talked briefly about how testing it is and what life's like as a mortgage broker. So yeah, it does make total sense.
Yeah, I think you know what, like that 2-year window that everyone will, I say window, it was horrible, right? We're all stuck in our houses during COVID or what have you. That you know, we all saw that the mortgage market, with its restrictions around criteria and LTVs and so on, for a lot of people, it was an exceptional time for business, right? Because you know, the lenders that were out there were evolving day by day to get back to some form of BAU, but some of the restrictions, most namely the stamp duty removal, you know, that clearly was designed to keep the property market moving, right? Because people were buying houses they were never going to buy before, which meant that the property being sold was probably being sold for more because there was more buyers trying to buy that bricks and mortar. Clearly, that means that some people may have property prices that were, you know, dare I say it, far greater than what they probably get today. That's cool. Fair play, right? What that meant was that the mortgage brokers involved in that clientele were extremely busy and worked really hard to get them to customers the mortgages. But they're the guys that are probably seeing the biggest impact now, because pipeline would have started to drift significantly. And then on the flip side of that, people looking out in thinking this must be a great market to work in. People, you know, there's 15 buyers per house. That means there's an obscene amount of mortgage opportunities there. Great. It's the complete reverse now. In some scenarios, you know, there's properties on the market for weeks and months without viewings. My mum's the same. She's selling her house. Great house, lovely house. 2 years ago, would have sold in days, minutes maybe. Now, not a viewing in 3 weeks. So it's a very different market. They're probably the people that you've mentioned that may have come into the market with eyes wide open for optimism, and it's just been reversed, unfortunately, which we're trying to get out of as an industry, very quick but supportive and in the right risk areas. But it is definitely a different market than it was 2 years back.
Definitely. And I think with regards to when you look at things like remortgages, because you've got those brokers who were new into the industry and they were very much of a reactive with the people that were knocking on the door saying they needed a mortgage, I've found a house, and they were being very reactive rather than proactive with things like that. But they've not been proactive with retaining the client now either. And that's what I'm sort of seeing is there's a lot of, we monitor it. I know it gets monitored from what business will monitor that, the remortgage conversion, but I'm sort of seeing that the remortgage conversion is not as great as what I would normally expect, because for various reasons. It'd be interesting to get your take on that with regards to the remortgage market as it is right now. But like the brokers that were doing that, they don't know what to do with regards to keeping contact with that client. So in the 2 years time or the 5 years, they came into the industry 2 years ago, became a broker, signed up clients, not touched them for the last 2 years, not done anything with them. They don't know. I'm sort of seeing that, particularly from a coaching point of view, is that there's no process from client retention, which is a real big shame. That's like a cardinal sin as far as I'm aware.
Yeah, I mean, like, so everyone's got the different processes, whether you are, you know, if you're employed under a business, if you're self-employed, if you work under a large corporate network or a small up-and-coming network or whatever that looks like, everyone's got their own sort of bias towards what they do. Typical rule of thumb really is to sort of annually keep touch with your customer, you know, and some might think, you know, and I get why, I've got a customer tied to a 5-year fix, you know, an anniversary call to see just how they're getting on. What value does that add? It adds an absolute obscene amount of value that, you know, I can tell you from firsthand. A friend of mine set up as a broker during COVID, just before COVID, actually, self-employed, and does that. He does this call once a year, just to touch base with the customers. You'd be surprised how many people go, oh, yeah, it's fine. I've got this concern coming up. Yeah, a conversation about insurance maybe. Or actually, I'm thinking about doing an extension to the property. Or I've got maybe a bit of a problem going on. So that could lead to different stuff, you know, second charge conversations. But more importantly, customers bought in to you as their broker. B, you get referrals because actually, by the way, since we last spoke, my, I don't know, uncle, nephew, niece, grandparent, whatever, they're looking for X, Y, and Z. Can you help? Yeah, of course. So you're killing two birds with one stone. You're supporting your client and you're getting new leads for free. And that then pays the way for when the time's right, 6 months before maturity, maybe a bit longer now, given some of the challenges in the property market. Get in contact and start talking about switching, remortgaging, retaining, whatever it is that you're looking to do. Get all over that.
No, I 100% agree with you, and I think, I say, annual is minimum. Given that the technology that we have now at our fingertips with regards to contact with clients and CRM systems and apps that can just send out birthday messages without you really doing anything from a technology point of view, and I think I think the broker sees it from they either don't understand the value in it from their point of view, or they don't understand the value of it from a client's point of view. And like you said, I think just they just assume that the client's going to remember them a year later, 2 years later, 5 years later. And do you know what? The reality is they don't. They might do, but they might not. And I think if you've got that doubt in your mind of they might not, then you need to be having those touch points with those clients. Like you said, just picking up the phone and saying that you're there. Well, if you sort of completed on 10 mortgages a month as an average, shall we say, that's just 10. Like that's like you're going to be doing 10 calls a month predominantly because you'd be 120 clients a year. Every single year you're contacting them. I'm all right with the maths there, aren't I? I'm just doubting. Do you know when you're just doubting yourself there in terms of the maths? I'm thinking, I am right on that. Yeah, I didn't prepare that bit. So yeah, but it's just 10 calls. What can that could be 10 hours maximum out of your working month, but means massive for, like you say, the opportunities that will bring to talk about things you didn't talk about or the products that and the services that you offer that they didn't talk about or you didn't talk about or they didn't take when you was busy. It's a great time to be those way, because I see a lot of brokers where when they were busy, like saying the good times where we've got loads of people buying houses and the protection sales slumped because they were just being very reactive with the leads that were coming in. So they couldn't follow their normal process. If that was you, then that's fine. Pick it back up now. Like this is the time to pick it back up and then revisit with that client and just give them an excuse to call of, yeah, you've been moving in a year now. Can you believe it? Don't worry. I'm still looking after you. I'm watching the market. I'll be in contact with you, etc., etc. How's little Johnny getting on at school that you moved to in that area for the school, and just having a little one thing that you remember that you remember about that client, and they're just going to think, wow, like Matt's amazing. He rings us every year. Remember that little Johnny, we moved there because little Johnny wanted to go to school, and that he's in contact, and I know that he's in control, and that's what they don't need to worry about it because they know that Matt's in control of their mortgage, their financial services, because you've been in contact with them. Whereas if you don't make contact with them and they see the markets, all these things about interest rates changing, they're in a bit of a panic mode. They're not going to be thinking about you. They're going to be in a panic situation. They're not going to take that breath and go, do you know what? I need to ring Matt because he was absolutely spot on with us before 4 years ago or whatever. They're not going to make that. They're going to make that quick, reactive click of a button, PT done, and you've got nothing from the client to retain.
Absolutely, and that's a very present, very present topic, right? So going back down to my point around maybe newer brokers putting out content online, right? Because let's be fair, like everyone's got one of these in their hand, at some point in the day. Yeah. Best way of generating business, whether you're in mortgages, whether you sell flowers, doesn't really matter. If you can connect online where people spend most of their time, you will get business off that. You just will. Now, sometimes it's not about putting the easy message out to generate that. For example, interest rate rises. It's not always about putting a post out to say that the interest rate's risen by 0.25%, for example, because to Joe Public, that could mean quite a lot. That could mean alarm bells. Oh my God, my already expensive mortgage payment is going up by a sheer amount. 0.25% on hundreds of thousands of pounds sounds an awful lot of money. Actually, if you put that into some context and spread that across the term, that could be not a lot. it's still an increase, but it might not be a seismic increase to what you're panicking. So, for example, I saw a brilliant post from someone a few weeks back when an interest rate did rise initially again, and it was, rather than here it's going up, contact me if you need help. It's a case of, here's the average mortgage in the UK. Here's what this would mean if you're on a current variable rate. This increase would affect your payments by X pounds per month. That's like, oh, that makes sense.
Yeah.
So I'm not going to be £400 extra a month down. I might be £40 extra a month down. So actually, rather than get on the phone to the broker or lender and panic about that, I've just got to look at my budget a little bit. Maybe I don't pay for this thing that I like doing once a month, whatever that is. Maybe I just pull back on that a little bit. Maybe, things like that. Just a quick rebudgeting conversation might be just useful. Again, playing it back to the annual conversations. If you're used to speaking to your customers as a broker and vice versa as a customer to their broker, that conversation takes 5 minutes, potentially. Granted, there's a lot that might not be in that situation, and we definitely can't play them down, but that's where the broker adds complete solid value on that, right? Because that's where you guys swoop in as the heroes and really do put the customer at ease to go, look, it's not perfect. The rates are going to go up. You're not going to get a fixed rate of 1% anytime soon. But what you will get is this, and this what it means to you and your outgoings. And that's when you can reforecast budgets, discuss, some of the things, maybe some of the lifestyle things. I don't know what conversation that could lead down, but the point I make is brokers contacting regularly will stop all the panic for their client, will save you a lot of time in the long run, and actually could probably lead you to more business.
It is, and it's just about, like you say, about brokers. Mortgage brokers love jargon and love sort of making themselves feel important with abbreviations and all the rest of it. But and things like you say, there's a similar sort of thing with interest rate rises, because it's a good point that you made, and I didn't see that post. If it's a case of it's gone up by 0.25%, and the average mortgage in the UK is X, it's gone up by this. Customer gets that. Okay, I can understand that. Or it's the same thing of it's difficult to quote rates on social media without having the compliance check and all the rest of it. However, if you did get one, and it said if you're a customer that had a mortgage 5 years ago and you was on a 1.99% rate, and then today you're looking at average of 3.99, the difference to you per month will mean X, and there are ways and things you can do about that. But and just giving that and you can get that approved. That there's nothing wrong with that. You just got a bit of time, and that sort of evergreen stuff that you can, obviously it's relevant right now, but it's still stuff that you can be putting out there every few weeks, every month kind of thing, just to put the customers at ease of going, it's like not, and it's just different, isn't it? That thing is, it's not the same thing as interest rate rises or interest rate reductions or the general generic stuff that you tend to see that get posted on social media.
Of course, and that's where the message lands for the customer. That's where actually, though, as a broker, because your own client bank's going to see that message that you're putting out, and you might send something out on an email distribution group or whatever that may be, automated. Right? That's brilliant. They're all going to see it. Do you want them to contact you with concern, or do you want them to contact you if they really need you? I'm going to hazard a guess it's the latter. And if you're doing the former, which is putting out a message that explains this is what's happening, all right, but without any content as to what it could mean, you're going to get a lot of non-value add calls. You might create a bit of non-value add, not a bit of panic for the client. And I'm not saying that them posts have created panic for people, but I'm guessing a lot more people would have had conversations around what does it mean for my current interest rate versus, I don't understand, what does it mean for my current interest rate? I'm panicking about my payments versus actually seeing less calls around, okay, I'm in this scenario, can you help? Because that's where the value add conversation is,
Yeah, it's certainly is. But I think, again, it's about the proactiveness with your clients. That mortgage broker, as a mortgage broker, you're building a long-term career, you're building a business for a long thing. You want the client relationship for life. So if you're having that conversation, you can see the posts on social media, but you're having meaningful conversations with clients around preparing them for like the things that you were talking about before. It's preparing them for the difference in the market that's going to happen maybe 12 months before the remortgage is due, but gives you a chance to speak to them, just sort of say, look, I don't know if you've seen on the news or if you've buried your head in the sand, but this is what's happening in the world of mortgages right now. So we just need to. We'll still get you the best rate. We'll still look at keeping your payments as most competitive as we can. But the things you're going to be preparing yourself for are this. So if you could do something now to prepare yourself for that, at least, like I say, you might be able to cut your cloth accordingly in terms of outgoings and spending. So then when you do, if your payment does go up by £100 a month, £200, £300, you're prepared for it before, rather than going, you get to the edge of that cliff and it's just then, right, I've gone from 1.99 now to 3.99 and my payment's gone up by £300 overnight, and not prepared for that. That's where your brokering comes in more, because you're thinking about your client. You've got your client's heart, like welfare and financial well-being at heart. And the clients will see that, they'll understand that, and they will buy into you so much more because you're proactive with what you're doing.
Yeah, definitely. And it does then create that environment of just like a more relaxed conversation. If you're picking the phone up to your broker every 2 or 3 years or 4.5 when your product expires, it becomes really formal. I know it's a formal process, clearly, but like at the end of the day, it's not I mean, you know me by now, I'm not a formal kind of guy, right? I am formal when I need to be, but I'm not your traditional person that works in financial services that some would say is, a corporate industry and, suit tie. I've got a hoodie on today, a pink hoodie, right? A suit tie out and about. That's fine. I can do that when I need to do it. But that's because I like to be just relaxed around the brokers I speak with, the clients, the events that I present at. I want to be relaxed. I'm a human, and we're all here for some purpose. We don't know what it is, right? But the point I make is that it should be natural. It shouldn't be a forced formal meeting about a mortgage. It should be a natural conversation about the house that you own via lending and how we're going to support you getting the best possible financial agreement on that as available to you, but relaxed. It shouldn't be nervous, because people. I remember way back when I first got our first house, me and my wife. I was so nervous about getting a mortgage offer approved, and you think, I see this every day, hundreds of mortgages flying out everywhere. And you think there's people at the end of that extremely nervous. And actually, is that because first time buyers, mate, I get it. Yeah, I do get it. But if you're remortgaging and you're nervous about getting that approved or offered, I think there's more for a broker to do with their customer there to actually, this is a relaxed environment. I'm just getting you a new finance agreement on a home that you've already got and you've maintained payments on most of the time. So there's a bit there, there's a bit to work with. And to your point, it goes back down to just consistently speaking to your clients, really, It
certainly does. And I think with, like, we're talking about retention and having conversations with the clients, and clients will remember the stressful things that happened to them 2 years, 3 years, 5, because whenever they bought that house or moved or spoke to you before, the chances are, particularly if it was 2 years ago, mortgages was a stressful time 2 years ago with regards to the criteria changing, getting hold of lenders. Like, look, you remember going back to those days of I remember the group chats within my firm of the heads exploding after 2 hours. So I think if you wasn't a good broker at that time, you would have portrayed that stress back onto them in terms of, because you would have been stressed because you've got clients on it, you're trying to get your cases progressing, solicitors not doing what they're doing, can't get hold of them. It was quite a stressful time. And I think, like you say, that it's like that. You've got to convey to that client now that actually it is about the service, and it's not remortgaging. It's not as stressful as what it was the first time round. There's not that panic anymore. We're not. Yes, we've got different situations going on with regards to rate changes, and yes, brokers are submitting applications, and then next week the rates reduce, and then having to re-put that to do it again, kind of thing. However, fundamentally, from a client's point of view, it was quite a stressful time. It was for a broker, but that's what they're paid to do. Whereas the clients are looking for the end goal of getting their home. With the remortgages, you've got to take that thing that sort of opinion that they've formed 2 years ago, 3 years ago, that it's a stressful thing. And if you're not in contact with them, if you're not in control and you're not relaxed and informal, and they're seeing you on social media and everything's you've got that very calm and in control kind of thing, but then a relaxed, informal kind of environment, clients will then buy into that market, and then they're more likely to reach out to you than they were than they would be if they wasn't seeing you, if you wasn't in contact with them, because all they remember is, oh my God, I can remember broker's head exploding because the lender they couldn't get hold of them, or they changed the criteria again, or the solicitor wasn't. All those bad things that we've got to get rid of.
Yeah, but you know what's really good, right? So I think about this quite a lot, you know, when you're watching some of these, like, let's scale back like 20, 25, even 30 years, right? Mortgages were obviously still a thing, but intermediated mortgages wasn't very big, you know, tiny portion of the mortgage market was via intermediary. Yeah. Now you've only got to think you've got to look back. This is how great brokers are in the current market, right? It's really positive to be a part of. If stuff like COVID, the interest rate crisis, you know, all of these things that are going on have happened to the seismic effects they do now 30 years ago, there'd be chaos. There'd be absolute chaos. Customers wouldn't know what to do. They would never want to borrow money off a bank, would they? Because where do you go? Because you might be able to get through to the bank on the phone, potentially. There wasn't such thing as live chat back then. Not that they're actually great in today's world, if you listen to some of the comments you see online. But fast forward to now, right? All of these, I know the problems, right? They do land on brokers' desks, but do you know what? That's not something that is part of the physical black and white process of applying for a mortgage for a customer. It's something that you do because you run a successful business and you are very proud of what you do as a broker. And that is what's brilliant about what we've got right now, because we've got an industry that's actually thriving on supporting the end consumer, you know, and intermediaries in the mortgage market and in all different markets, to be fair, but especially when we work in mortgages, honestly, probably just inject the lifeblood to what it's a boring industry, isn't it? Let's be fair. Like mortgages, it's just money, debt, outgoings. Not everyone can get what they're after. Not everyone gets what they want, especially right now. And it's not always positive conversation, right? But without intermediaries, this mortgage market would be flat. It would be disinteresting. It wouldn't thrive as much, because speaking from like day-to-day experience, you know, you look at some of the lenders that are out there, they're innovating new changes daily, not because they're full of like people that bring these ideas to life. It's because they've got these ears. All they do is listen to the brokers that tell them what they're missing out on, what the clients are struggling with, and if they've got appetite and they've got risk to do so, we could look to do that. And without brokers doing that, we'd be in a mortgage market that would be completely different. Be stuck in the past. It's brilliant.
It totally is. I think, like you say, with the role of the mortgage broker is more prominent this year than it's ever been before, and it will continue that way. People need brokers, and I think that's. I'd be interested in your take on it, to be fair, Matt, because I speak to brokers that are pretty quiet. They're sort of saying pretty quiet, not got quite the business that I thought I was going to get. I think I don't know what to do. I'm looking at buying leads and they're not so great. And there's that sort of side of things. And then there's brokers out there that I've talked to that are productive, busy. Yeah, this is brilliant. Yeah, this is great. I've got less clients than I might have done, but then I'm doing more business with those clients and I'm working a better process. Or I've just got more clients in general and I'm thriving in this kind of market. So I'd be interested to get your take and thoughts on that, to be honest with you.
Yeah. Belter of a question, and some of that I could discuss all day, right? I mean, you know, I could chat all day anyway. But so here's the first point, right? People that are going to be in the current market buying leads in, right? Each to their own. You know, anyone can do whatever they want, yeah. But this is the conversation I have with some of my friends that are brokers, and you know, a couple in particular that have started to go on their own in very recent times, thinking about where do I get leads from, how do I get business, you know, and I'm not going to be that guy that's just cliched and go, it's just social media all day long, because it isn't for some people. No. However, what I do say to them sometimes is I'll challenge them to say, look, before you pay for a lead, what if I told you that a lead could pay you, right? Straight away you'd think, go on then, there's a catch. And there is a catch, right? And it's all about, again, it's going back down to knowing your audience as a broker, right? So if you work on Deadliest Catch and you go fishing for crabs, see the stuff they don't want, they throw back in the sea. They just do, right? And not to sound derogatory or anything at all, but actually, if that's a client that you're not willing to attract right now based on your skill, knowledge, expertise, you're going to put that back in the pool of custom. So if you are putting content out there from social media to generate brand new leads at low cost as possible, no advertising cost, no Facebook ads, just purely groups, content, sharing, right? You're going to want to attract people that you think you've got the skill, capability, and resources to attract. So let's take a very generic customer, first-time buyer, no experience in mortgage or prepayments, renting previously, potentially got a small deposit, right? So you've got a very niche set of circumstances there where you're targeting content based at people that are looking for a higher loan-to-value mortgage because they've got less fluid cash for a higher deposit, okay?
Yep.
So whatever you get in then from people that aren't that subtype, you could choose not to deal with that. You could choose to have a referral to some other brokers or colleagues if you're in a business. That's cool. However, going back down to the point of the lead paying you, right? Let's assume that I've got an Instagram page like yours, very good at putting content out there, attracts a specific customer type, i.e. in your scenario, broker coaching, right? How do I don't pay for that apart from time? Maybe you've got a Canva Pro account. All right, it's $10 a month, but let's assume that none of that's paid. You're using Canva for free. You've signed up for Instagram for free, and you're putting content out there that's coming from inside your mind, right? So how's it going to pay you? So people think, oh yeah, the proc fee, the referral fee, the advice fee from the client that I eventually get. What about the ones that you don't? Okay, so here's where I really talk to my friends and some brokers out there that I deal with daily about when they're talking about, I'm buying in leads or I'm getting hits on the website, but I'm not getting nothing for them. Every single lender will do a credit search on a customer, every single one, right? Because clearly you need to know what the profile of that borrower is for the lending you're going to give them. Every single broker, therefore, should have a credit file to understand whether or not that customer is going to be suitable for the lending that you're going to recommend them, i.e. you've got a set of circumstances, you've done a fact find, their incomes and outgoings, they've got no credit history issues, yada, yada, yada. Seems relatively mainstream. But they did forget to tell you that one thing that's quite important, that they missed a higher loan purchase repayment 3 months ago. They forgot about that. That's on a credit search. If you've got that in your hands before it's placed to the lender, that's worth its weight in gold. All that time in research is saved. You're placing it right first time. But here's the trick. The credit search, where do you get it from? Is it a coincidence that we see so many people on social media pushing really, really good content out there and making sure that customers come to an appointment with a pre-printed or pre-populated personal credit profile from an affiliate link in their bio? No, it's not a coincidence. Why? Because that gives the broker a commission, which is great. So my point is, you've put content out there to an audience that you're trying to attract. You're preparing them for a fully thorough fact-find meeting to arrange their mortgage. You're bringing a credit file that they've provided that's giving you 3 sources of information from one place, and you're getting a little bonus back for them bringing that to you. That's how a lead can pay yourself as a mortgage broker.
And it's a great, absolutely. The thing is, Matt, it does work because it's just getting it part of your process. And I think if you haven't got that as part of your process, then you need to get that as part of your process, because like you say, from a client point of view, if I was actually talking to one of the affiliate providers this morning, and it just so happens that they're looking at how they can improve working with brokers and what can they do differently from a client experience point of view and that sort of thing. So they do want to. One of my feedback was about helping brokers create social content around a credit file, because that's a vital part of the process from a broker's point of view. And it is, like you say, you're not going to be able to retire on that, but actually you can still win back. You're going to get paid some back of the 40, 50 pound that you paid to the lead, depending on what it is, depending on where you get it from.
Yeah.
You're going to recoup something back from that lead, because, and if you've got a couple, then you're going to get even more back, kind of thing. So making sure they've both got the credit file. But I think but brokers don't have that as part of the process, which I'm glad you said it, because I thought it was just like these brokers that to have got it instrumental in their process. They've got, it's part of the online bookings diary that they use. It's a part of the auto emails that get sent once somebody client books in the diary. They get an automated link to get the credit file, and so it's just automatically happens. And I think that's the thing with the brokers, is that it's just building that into a process, which some seem to be missing out on. And why would you miss out on a income stream right now when everybody's looking for that income?
Yeah, but the most important thing about all of that is it's not actually just about it's not about the little kickback that you get as a broker getting that credit file. It's about making sure that the lead that you've got for free, right? Because you've got it from a piece of content you've put out there, whether or not the time spent on that is going to be worthwhile for you and the client. Because if you get that credit file up front and actually, it looks like a bag of sweets, there's red, yellow, and green everywhere, that's probably not going to be a simple case for one of the big lenders on the high street. It might not be a simple case for one of the specialists off the high street. So, at that point, the conversation could be a little bit quicker, i.e., this isn't for right now because of these reasons. Yeah. However, I see so often on a day-to-day basis, right, where brokers have discussed cases of a customer, and actually they've placed it with a lender to find out there's drastic credit circumstances that lender was never going to support that client for the mortgage. Well, taking a step back and getting that credit file first will save you the time placing that. The issue of giving a decline message out straight away, because straight off the bat, you've got a customer that feels deflated. Oh, I thought I could get that, but now I'm not. That might deter them. Yeah. And then, that's where the problem is, because if you can just, everyone wants that. Well, let's say everyone wants that 2% mortgage. Everybody wants it. Not everyone can get it. So if you come with your eyes mind open to actually, I'm looking for a mortgage, not that mortgage there. You've probably seen it 100 times. I've seen these mortgages online for 1.78%. I want one of them. And then you find out, well, actually, it's for second-time buyers, 65% loan to value, perfect credit, minimum income. Your clients, none of them, right? But if they come in assuming they can get that and then get let down, they might feel deflated and then be like, do you know what? I might just ring the bank that I deal with. Mm-hmm. And then they're the ones that get lost in this environment. And that's when good guys like yourself sweep in, offer services to everybody based on a set of circumstances that you can support, but straight off the bat, get them prepared for the next step, which might not be your household name lender to give you the mortgage that may start at a 1 or a 2, right? But they know and expect that. They're not going to be shocked when they get a decline and not deflated. That's because you've prepared for it.
No, well, it's about time. Like we've talked about self-employed brokers, it's about the service they're providing the client. If you have got that, then it's a far better journey, far better experience, far better service from a broker's point of view and the client's point of view. So there's they say it's not just about the income that it generates; it's about saving time. You're self-employed as a mortgage broker. You want to save time. If you're not sat there on a salary earning, doesn't matter what you're doing, you're earning your X amount per hour. You're not in that space, you're not in that situation. So it's about saving time with that client. And again, this is, I see with brokers with regards to retention of the non-clients. And what I mean by that is that you get those people that, like say, the bag of sweets analogy with regards to the credit file. And we've all seen those kind of people. But then if you help those people and just give that 10, 15 minutes of trying to explain to them what they need to do to put that right, when they put it right, they will come back to you. If you just go, can't help you, that you just need to sort yourself out. There's no way I can get a mortgage. No, it's taking a big deep breath in and go, no way kind of thing, and go on and move on to the next one. Just spend that 5, 10 minutes, 15 minutes with that client, explain them what they need to do. They will remember you because everybody else has just took a deep breath and told them to jog on, whereas you haven't. And it's them. So it's that again about building that long-term. Every client, every lead, everything is an opportunity to build a long-term business.
Yeah, and do you know what's really interesting? This is a crazy analogy, right? But I use this. I mean, my team will tell you the same. I'm a man of crazy analogies, right? And a lot of the things that we do and challenges that we face day to day, right? Whether it's like self-employed broking you mentioned there, whether it's a mortgage customer looking for help and they've been let down a couple of times by maybe a big bank or maybe a local broker or whatever. If you think of it right from a child's eyes, right, they experience so many things that they just doesn't influence them doing it again in the future. Yeah. So, for example, my eldest, she's 7 now. She's just started to ride a bike, right? As she fell off it, loads. Is she bothered about it? Is she willing to get back on and try harder to get what she wants, which is to ride a bike? Not at all. Not interested. But, as adults, become more aware, don't we, around the risks. Oh, what happens if I fall off and did this, that, and the other? I.e., what happens if I went self-employed and never got any mortgage leads? Or what happens if I went for the mortgage that I've been declined for 4 weeks ago and I never get it the second time around? I'm never going to get a mortgage. Well, you might. Do you know what? Sometimes it's about listening to what's around you and keep trying. And I always point back to the fact that sometimes, I always think if something challenge is happening to me, what my kids do, what do they think? What do they think right now? My youngest, don't care. She'll swing from the rooftops lights all day long, but she'll get on with stuff. As my eldest has got a bit older, she starts to understand more, but they're bold enough to just keep trying, right? And sometimes, though, that's because that they are a little bit, they're innocent, right? I get it. They're innocent and they're younger. They're not exposed to all the risks, the actual physical day-to-day risks that we have as people. But the point is, the experience challenge, and they just keep going, And sometimes we need that little bit of a child's heart and mindset, right? To just be like, today's tough, but that's going to be better when I do it. So if I am that self-employed broker looking for the correct amount of mortgage business without having to spend the money that I may not have in generating leads, I'm just going to keep going. It's not working right now. I'm not seeing leads from content online, i.e. I fell off my bike multiple times. I'm going to get back on it until I ride it comfortably. And you know what? It will pay off, because I'm telling you now, it absolutely will. If there's any self-employed brokers out there that are thinking, right, I've just started, I've gone self-employed, I need to get content out there. Yeah, I know I'm on a tangent here, but just do it. Do it, find your audience, put value out there, and also people will come knocking. I put social media content out there, not based to my employer that I work for, just genuinely sometimes a bit humorous, sometimes maybe motivational or what have you from leadership stuff that I'm studying. But it's mad how many times I get messages on Instagram, LinkedIn about, oh, Matt, I've seen this, that, and the other. Interesting. I'm looking for a mortgage at the minute. I don't advise on mortgages, sorry, but I can point you where you can get advice from, because they see the content.
Yeah.
And I don't do it all the time anymore. I don't dedicate as much time as I used to the content. But if I was self-employed, the one place I'd start is that. What I then do is get people bought into me. I get people bought them into maybe a content funnel, like I've kind of discussed before. I know it can get more technical, but there's some great people out there that have got really, really good insights. I saw you had Dan on the podcast. Dan, Dan really very detailed in the funnel side of things. That's the sort of stuff that you could start to educate and look into if you really want to get a succinct content plan for self-employed growth.
Absolutely. I think it's a great analogy. Yes, it was like a bit off tangent, Matt, but nothing more than I didn't expect anyway. But it made sense because, and I think from a child's point of view, all they're focusing on is the goal. Literally, it's the goal of riding the bike. I want to be able to take those stabilizers off and ride my bike on my own, and I'm focused, and that's my goal. And they will just they won't look at all the other things. They'll just focus on the goal and go, do you know what? I've just got to keep going. I've just got to keep going because I'm focused. And we lose that ability to do that the older that we get. And you need to pull yourself back in and go, do you know what? That is why did I become a self-employed mortgage broker? For these reasons, and that's my goal. And you've got to keep going because you will achieve your goal eventually. Like, she will ride a bike. Absolutely. There's no question is in terms of that. She will ride the bike, and it's the same from a broker's point of view.
Absolutely. And it's about just, brushing, getting back on, look at what you've learned, seeking for help, and just keep going. There's plenty of people around that can help.
Matt, what a perfect end to the podcast. 47, 48 minutes in. What a great end to the podcast, and a great thing to finish on because, we can all reminisce with riding bikes. So, Matt, thank you so much for your time. Thanks for agreeing to come back on the podcast. It's really much appreciated.
No, thank you for having me.
Thank you for listening to the Mortgage Broker Broadcast, the podcast which helps mortgage brokers at all stages of their mortgage broking career. If you have any questions about this podcast or any topics you want us to discuss, or if you're interested in working with me further, then please get in touch.